Hello traders, my name is Grega Horvat and welcome to our new video for the upcoming week in which I will be tracking the following markets very closely. So I will look at the FX majors and also check gold, silver, crude oil, S&P 500, DAX and 10-year US notes. So euro dollar is still under pressure from 2018 highs. That's from here, down from 1.26 area or so. So I'm expecting more downside. Ideally, market completed this flat correction here for wave 4 and we are now in a new free wave decline, looking for wave 5 to complete wave C in an ending diagonal. So I stay bearish on euro dollar, but not sure if this corrective recovery from August is already finished. The idea is that we are forming a flat correction here for a wave B and that we will see another push higher to clear this swing high, this old swing highs before we turn to the downside. What I also like is that actually market did not retest this trend line yet. Okay, so ideally we will see another retest of this trend line and then turn to the downside. I see a lot of traders, especially dollar sentiment really looks bullish here. So maybe crowd is too bullish, and I would not be surprised if we will see another pullback higher on the euro dollar, which means pullback down on dollar index. However, we always have to respect what the market is doing. So at the moment, there is still a decline that is in progress here on the 4-hour chart. So ideally, that's wave C, but I do not see a confirmation that this really is wave C and that we are turning already back to the bullish side. So the idea is that you have to see a 5-wave rise from these lows to confirm a reversal. Okay, so for now this is not the case yet, so I'm just watching this market, but if we see a bounce, aggressive one, then clearly I would be interested to look for maybe even long opportunities on this euro dollar pair. Okay, but as always we have to consider alternate wave counts, especially as a trader. Okay, as an analyst, okay, I'm expecting this wave C to the upside to retest this daily trend line, but as a trader I also have to consider that this market can already be maybe in a bearish phase. Okay, so let's assume that this is actually already a completed corrective rise. So in such case you would see a continuation lower, and this would be a key price action in the next week. Would be a key if we will see a continuation higher for wave C, or maybe this is already continuation to the downside within this bear market that is underway from February of 2018. So the idea is how this structure, current price, will unfold. As I said, if we'll see a very strong bounce in 5 waves, okay, then I would be willing to buy a pullback, okay, and look for move to the upside. If this recovery will stay very slow, choppy and overlapping, which means it will have a personality of a temporary corrective movement if we will not be impulsive, which means if this move, this recovery will be slower than the previous decline, then the idea is that this will be a correction and that we will see move to the downside. So in such case, I would probably label this as already completed ABC structure. Okay, so as I said, my primary analysis, also because of correlated markets, suggests that we may see another push up here on euro dollar. Okay, but as a trader I have to consider both sides of the market. So if we'll see only very weak bullish recovery, if I can say it like that, then clearly I would be intending to look for maybe even for shorts if I see limited upside. Okay, but the idea is overall that sooner or later euro dollar will be probably trading even lower, either from here or from higher prices. So I will just have to watch the short-term structure to confirm which wave count on the 4-hour is going to be correct. Is it really this wave B already over, or are we already in new bearish phase? Okay. However, what I would love to see before this big bearish decline may resume is probably a retest of this 100 weekly moving average. We haven't seen that happening yet, so maybe we'll see it happening and then turn to the downside. Also, there can be head and shoulders pattern unfolding here, and the right shoulder is maybe still underway towards these upper levels, okay, and then maybe we see a breakdown later this year. Okay, now also cable may also see more upside. Well, if you recall, I have been tracking these equal lags. So when we see market reversing from this support very aggressively and breaking above this trend line in September, I said that probably we are in a new 60 or 700 pips of recovery, because that was always the case in the previous cycles, as you can see. So market touched these levels and came down very nicely actually. But you can see that it came down only in 3 waves, okay, and this is a corrective structure. What was key, and I also posted this on Twitter, the key was actually that market did not break this trend line support. It is actually a trend line of corrective channel, and this trend line has to be broken for market to continue in one direction. So actually, since we have very aggressive bounce from this area and now already testing the upper trend line of this recent downtrend channel, I think that there is more complex wave 2 in progress, okay? So it can be an ABC X ABC pattern. So this is A, B, C, wave X, and now we are tracking another ABC. Okay, also look at this recovery. It's very sharp in a very short period of time away from this trend line, as I said. So even more gains through Monday, Tuesday would really confirm the case that we are actually headed higher and retest this previous highs from September. So cable short term, it looks like that we may see more upside. Also here I can see that there is a weekly moving average 100 that still hasn't been tested really. So again, maybe this could be showing us the case that euro-dollar could, after all, really see that wave C to the upside if we consider that market can be in positive correlations. Now let's take a look on Aussie dollar. Now Aussie dollar on a weekly or monthly chart, direction is clear. You can see that we are trading now below this multi-year channel support, so clearly there is room for more downside, especially if you consider that this recovery in a weekly chart unfolded in 3 waves with very slow and overlapping price action in wave C. So this was very slow but still bull market that caused a very strong bearish reversal, and I think that it's just a matter of time when we will see a retest of this September 2015 low. So clearly I remain bearish here. Daily chart, it's the candlestick patterns were not so clear. Okay, so normally when I don't see a lot of clear personality with these candlesticks or bars, I want to look at the line chart, and on line chart I was able to count this in positive fashion. So what I'm looking at is more downside, but be aware of a corrective wave 4. Currently we see prices approaching this lower trend line support of this channel, so maybe we'll see another bounce to the upper side of this channel and then our new reversal to the downside. But the idea is that there is more weakness probably coming in play, especially after wave 4. Why? Well, I'm looking at Chinese currency, okay, and Chinese currency here is in black, right? And you can see that there is actually a sideways price action. Okay, so this sideways price action suggests that this is just a pause with an ongoing uptrend. So clearly this was a strong recovery and I should respect this trend, which means I will be looking for more upside after any correction. And since first leg, this very small move was made in 3 waves, well, this either represented a corrective wave 4 that is already finished and we go straight up from here, or it's part of a complex correction. But I think it can be part of a complex correction, maybe a triangle here. But the idea is that sooner or later we will see a push to new highs, and if we consider that Aussie dollar has a negative correlation with dollar against Chinese currency, well, then we can expect even more weakness on Aussie dollar, which is in blue. Okay. So as I said, 2015 lows on Aussie dollar maybe are not so far away to be retested. Now let's take a look on dollar CAD. Now dollar CAD has some very interesting, excellent price action, I should say. We have seen a 3 wave setback from these 2016 highs, and now you can see that recently market made a wedge. Okay, I think that this can be actually leading diagonal, which means first leg of a new recovery. So more upside can be coming, especially because we also saw this broken trendline support, trendline resistance, which acted as a support here in recent pullback. And what I really like is that market bounced after very slow and overlapping pullback. Market bounce from the lower parallel trend line, which means that bulls are still alive, are still here. And not only that, we have seen a very nice reversal from the this 50% retracement and also this former wave 4 support area, which was actually some kind of a triangle, also from the support right there. So I think that there can be more upside coming. Also on the 4-hour chart, this is looking like an impulse. Okay, so clearly I'm expecting more gains and think that we may see these prices at 1.3875 retested. This was the old swing high, and if we see it even break with the daily close, decisive daily close above that level, well, then this would be an interesting price action for even more upside in upcoming weeks and maybe even months. On this weekly chart, what is really interesting, if we take a look at the bar candlesticks, is actually that this is a 50 period moving average. We have gap down. Okay, we have seen a new low, but look where dollar cat has closed. Okay, at the highs. So this is a very nice reversal candlestick formation, and this just confirms the fact that we really may see at least temporary low here, and at least free wave reversal is underway back to this swing, okay, or even higher. Now let's take a look also on dollar Swiss. Now dollar Swiss is also looking bullish, despite very big consolidation here, big range market on a weekly chart. But what I'm looking at is at the daily time frame. Okay, so I see a nice free wave completed decline here at the start of this year, and then this was reversed recently by some nice impulse that take us back above this trend line resistance. So I think that we have now seen a corrective pullback of a wave 2, like you can see here, because we have seen another strong recovery, and this recovery is clearly looking impulsive, and it also moved very deeply back into the previous wave A levels. So the idea is that this is actually an impulse start of a new uptrend, so I will continue to look higher, but nothing moves in straight line. We can see 5 waves up right into the 261.8% fib extension of wave 1 measured from end of wave 2, and also there was, as you can see, a lot of noise in the previous cycles in August. Okay, so because there was a lot of noise, I would not be surprised if maybe these same price levels will now try to act as a resistance. So maybe we'll see a wave 2 pullback. At the same time, actually, this could bring euro dollar slightly to the upside if we consider the dollar could come under pressure, but this is only temporary. Okay, keep in mind that I think the dollar is from 2018 highs, 2018 lows. Dollar index is a new bullish phase, and that any pullbacks that we are looking are just temporary. Also, let's take a look on dollar yen. Dollar yen has seen a very nice move to the upside recently, but still it retraced into 61.8, almost to 78.6% fib compared to the previous decline. So actually this can still be just another leg within this contracting range. I'm tracking a triangle A, B, C, D, E. So ideally wave D is now trading near resistance. Also notice that we have seen already a free wave movement. So actually this is wave C already underway, and this wave C already hit the first 61.8% resistance, which is actually taken off a wave A measured from end of a wave B levels. So a reversal maybe can be happening, but of course if we see a push to a new high, then wave C is still underway towards maybe even 100% here compared to wave A. But the reason why I would not be surprised by a reversal lower is because I can count 5 waves to the upside here since market broke out of a triangle, and what I can see that actually I connected waves waves 2 and wave 4, and I can see broken trend line. So ideally we are now in a new, at least corrective pullback to the downside, okay? So I'm looking for more weakness, at least in 3 waves, but ideally this will be much more aggressive sell-off for a deeper wave E. Also, there was a divergence on the MACD as well, so I think that the prices could really come under pressure. Another important thing is probably this doji formation here on a weekly candlestick. You know, higher is the time frame, more important is the candlestick formation, and this clearly could cause some weakness in the upcoming week. Now let's take a look on dollar index. Also, of course, if I'm expecting some kind of a bounce on euro dollar, then dollar index maybe could retest these very important levels. Okay, so waveform is maybe still underway. If we consider this can be a flat correction, but again, I don't have a confirmation that this is actually a completed flat formation. I would have to see a 5-wave drop first from this recent swing high, and this did not happen yet. So of course I have to consider also discount here on the right, which suggests that maybe after all we have seen a completed ABC pullback. So again, key will be how this, if I mark this, key will be how will this pullback unfold. Okay, will be a sharp decline, impulsive, or will be just slow corrective. If it will be slow, then I think that this could actually be wave 2 of a part for bullish trend. If there will be a very strong decline, then it will be part of a new wave C drop that I'm still anticipating for a wave 4, maybe even wave 2. Okay. Also, now let's take a look on gold. Gold may also help to euro dollar to come a little bit higher, because we have seen dollar moving to the upside, but gold was doing quite well. It held the support. Okay, so I would really not be surprised that if dollar hits resistance, that gold will now just maybe explode to the upside. Okay, notice that here on the 4-hour chart we have seen a 5-wave recovery from the lows. Okay, and then we have just turned sideways, but we're able to find a support, as you will see. I believe it was at 61.8. You can see here 61.8%, around $1,180. So actually we can see market trying to turn to the upside. Also, we have already seen broken corrective trendline resistance. So I connect the start of a wave A and endpoint of a wave B right there, and when you see this trendline broken, normally that's evidence of a continuation into a new phase. So I'm looking for this wave C to continue higher. Also, there is some kind of a triangle consolidation. Maybe this was wave 1, wave 2, wave 3. Now we are in a wave 4 and expecting a move to the upside into wave 5, right? So clearly I'm expecting more gains here. Also, what I like about the daily chart is that this old swing low can be maybe retested right there, and we'll see what happens there. Maybe we'll see a reversal to the bearish side, or maybe just deeper wave E. But the idea is that this is a temporary recovery, okay? Because I'm tracking here a consolidation, A, B, C, D, expecting wave E. But sometimes wave E can also be small. So it makes sense, definitely. Should be careful. And let's see what will happen here at 1235 area, okay? Because as I said, wave E can be also very small. And another thing that I want to show you is that as a trader, I want to consider, as I said, different possibilities, different outcomes, different structures, different wave counts. And if I show you another idea of the wave count, is this is wave 1, wave 2, wave 3, wave 4, wave 5. Wave 4 should be corrective leg, which can retrace for 38.2%, and this is still a little bit higher, as you can see, again at 1235. Also, wave 4, as I said, is a corrective leg, so it should be made by 3 waves, and wave C is still missing. Again, different wave count, different approach suggests that we can see more upside, okay? But only temporary, because sooner or later, euro dollar should resume its larger downtrend, which is clearly bearish because of 5 waves drop for a wave A, and now we are consolidating in a wave B. Also, silver is very interesting here, clearly bearish, and notice what happened recently. We have seen a nice recovery back to this trend line resistance. So actually this broken trend line could cause very soon a reversal to the downside, but maybe after after gold we'll see that wave C to the upside towards 1235. So on silver maybe we will retest $15 and then starting to slowly turn to the downside. I don't see a completed wave 2 yet, because this decline, okay, is not looking impulsive. So you can see here on the hourly chart, it looks very overlapping move. So at least another push to the upside, and maybe then a reversal lower will occur, maybe at the end of this upcoming week. Maybe we will have to wait a little bit more longer till the end of October. Okay, but the idea is that this correction could still send prices a little bit higher. Now let's take a look on the next one, which would be crude oil. I've been bullish crude oil, very bullish for the last few years, and what I see now is that actually wave 3 or wave C is moving into this very interesting resistance zone. I see 161.8% of wave of first leg measured from completion of a second leg, and also there is 61.8% of this decline in this area as well. Also notice this head and shoulders pattern, left shoulder, head, right shoulder, and the target is for this one is actually around 86. So generally speaking, we may not be far away from this market to slow down a little bit and move lower into deeper correction. Also, what I see here is that market break out of a triangle recently, which means we are in a final leg within this uptrend, and the sooner or later market may slow down. We have already seen first levels tested. First triangle measurement target has been hit around $77 per barrel, but there is maybe even more important 81, which is actually a measurement of this leg from a breakout point, okay, which was at 70.50 around there. So actually there can be more upside also on the 4 hour. I don't see completed 5 waves yet. I see wave 1, 2, extended wave 3. Now we can be a wave 4 retracing back to 38.2%, and then watch out for another push to the upside. There is a support clearly around let's say 72 to 73 area, around there. Okay, so as long as we are above that, I think there is a chance that crude oil will actually see more upside, but of course after a 3 wave setback for a wave 4. Now let's take a look also on the S&P 500 index. Now the S&P 500, I think that there still is a chance that we will see some kind of a more complex, maybe even flat correction for a wave 4. Or maybe wave 4 is already finished here, but the idea is that there can be more upside coming within this current recovery. Okay, here is why on the daily chart. As you can see, I'm tracking A, B, C structure. Okay, but wave C should be made by 5 waves, and I see waves 1, 2, 3. Now we are in wave 4. So even this bearish wave count suggests that more upside could be coming in wave C to complete wave B before we may see this drop. Okay. Also notice that price is now at this previous swing highs, which can turn into a very nice support. So again, we may see more upside here. Another thing is that this can be actually a flat formation, because the first leg here down was in 3 waves. Then we have seen a recovery again in a corrective fashion. So I think this can be wave B, this was wave A. And now maybe this very strong drop can be wave C. Notice that also market came now back to the area of a former wave 4. Okay, right there. So if your prices can recover at the start of next week, back above 2900, 2910, then I think that this market will be in a new stage for another push to the upside. Also here is of course this very aggressive bullish wave count, which suggests that the market is actually in a wave 5 trading impulsively, and obviously this one also suggests more upside after current corrective wave 4, which can be trading at around the support as well. So the idea is that even if I have this flat correction tracking, okay, that even this wave count suggests that we may see another push to the upside. especially as long as we are above this channel support. Okay, so watch out for this price to stay above it. If we're starting to see fall below it and approaching this invalidation level, then this will be important evidence that we are already in a wave C going to the downside for a flat formation. Now let's take a look on DAX. Now DAX weekly chart. This was a completed wave 4 back here in 2016. So if we are in a wave 5, we need 5 waves up. This is wave 1, 2. You can see nice extended wave 3, and now we are just consolidating for 2018, which can be wave 4. So expecting another push to the upside into wave 5, maybe even towards 15,000. However, this wave 4 can be it's a corrective flag, can form different types of corrective structures. Ideally, it will be a triangle, but there's also a possibility that this will be a deep ABC pullback for wave 4. So in either case, I don't see a completed pattern yet, but this 4-hour chart, 4-hour structure can be quite interesting if market will be able to hold the 61.8%. So watch out maybe for bounce back above 12,200. Then I think this could really set up for another push to the upside into wave C. In such case, I would be even more confident that we are in a triangle and not in a deep ABC setback, okay? But I think that sooner or later, again, maybe in 2019, we will see another push to the upside on DAX. Now, let's take a look on the next market, which will be actually the final one. It's the 10-year US note. So 10-year US note, what is the most important probably is that market has recently broken out of a triangle formation. So we know that we are in lag that should be final within this downtrend, which means that sooner or later market should form a bottom and reverse at least in 3 waves. Normally these 3 waves will take us back to the area of a termination point of that wave 4, okay? So the idea is that we are in some kind of final stages of this wave 5, and the reason is also because I can see 5 waves of decline. Okay, so we see waves 1, 2, 3, 4, 5, and even in wave 5 I can see waves 1, 2, 3, 4, 5. So the idea is that corrective recovery will occur. So watch out for more upside here, and if this will really be the case, then I think that dollar yen could actually come to the downside, especially if we consider that after all we can be completing this ABC pullback into wave D. Okay, so if 10-year US note will rally, I think the dollar yen could really come to the downside, and this may also bring dollar index down as well, while majors such as euro, cable may actually bounce. Okay, traders, thank you very much for your attention. I hope that you enjoyed the video. If you have any questions, please let me know. Have a good day. Bye.